going on, guys? It's Juan Zuniga, and in this video, as you guys loved our investing video, I'm going to talk to you guys about stocks and stuff like that, and I'm going to show you some of my portfolio picks and how much I've made from all these different stocks. But before we continue, the sponsor of this video is Rose Gold and Black. Right now, they're having an amazing deal, which you get if you click the link down below, 35% off their landing page, which is pretty cool. But on top of that, they're giving an added value to you guys. They're giving you guys something for free. For every purchase, while supplies last, of course, you're going to get a free bracelet. So how this works is you go into our landing page, you click something you want, and when you're at checkout, you have a selection of bracelets that you can get for free. I mean, one per purchase, but you can select something that's gonna go with that beautiful necklace you already bought, or watch, or ring, whatever it is, or if you bought another bracelet and you wanna stack, whatever it is, you're gonna have the option to get another bracelet for free. And one of my favorite pieces right now that you guys need to check out is this box necklace. This is a 20-inch. It's minimal, it looks amazing in silver. I'm telling you, it's one of my favorite pieces right now. This thing looks amazing. I love these necklaces, and you guys have seen a lot of them. I've had them in gold and stuff, but this one is perfect. It's minimal, it's 20 inches. I think for guys that's a perfect size, and you can wear it, and it just doesn't look gaudy. It just looks perfect and sophisticated. So check out Rose Gold and Black, guys. I'll have that link down below so you can check out this amazing necklace and get that free bracelet while supplies last. Now, let's continue with our video. All right, so first, the winners for the last giveaway from the last video have been picked. So I'll leave a message, or I left a message on each comment that won to email me so you guys can claim your Jade Black glasses. Today, I'm gonna give you 5 tips on how to invest, all right? 5 things that we've learned throughout the time that we started doing this, and I think they're very valuable tips. And of course, I'm not going to show you how to invest. Just 5 tips that can be very valuable to you when you're starting this crazy, hectic, and fun adventure. Now, let's look at the stocks that I have invested in, and I have made a lot of money, and I'm going to put a screenshot on the screen so you guys can see it. And this is all time, and this was started like around July of last year. Tesla, I made $31,000, almost $32,000 from Tesla. From Churchill Capital Corp, I made $8,530 from that one. Workhorse, I made $7,147. NIO, I've made $3,436. And Bitcoin I bought at the end of last year, around November. Bitcoin's a funny one. Bitcoin, I had about 2 to 3 Bitcoins. I think it was like 2.5 actually. Years ago when it first got up there, around 12 grand. Bitcoin went down to around $3,000. I thought Bitcoin was gonna be done, and I sold like around $3,000, so I sold at a loss. And now Bitcoin right now is at 8,065 at the moment of this video. So I could have made up my money and some if I would have held and just waited. I shouldn't have checked so often. I was checking every day, making sure everything was going good, and I freaked out when I saw it down there. I was like, this is it, I'm done, and I sold. You know, I didn't want to lose anything else, and yeah, it was a big mistake because I could have made a lot more money, made up my money, and a lot more money than what I had there. So yeah, Marathon Patent, I made $2,477. Apple, that's been an up and down. I made $2,000 from that one. And my cumulative report from November to today, I made $41,023.93. So in the beginning, it was rough trying to learn and get everything going and making sure I picked the right things, but eventually we figured it out, and yeah. It's becoming very profitable, it's becoming very good, and it's very fun, and definitely worth the risk and the knowledge that we've built throughout this time. Now, we are no experts. We haven't become experts in trading, but we've gotten a lot more knowledgeable and been able to see the things and sell at the right times and try to buy at the right times. First, learn the type of investor that you are. Are you the DIY guy, or you're the type of guy that likes things being done for you? So that's the 2 type of investors. The DIY guy likes to trade on his own, likes to do it on his own, manage his own portfolio, and do his own thing, his own research, read the charts, and figure it out on his own. It's like a puzzle, and it's fun, it's challenging, and it's cool. The other type of guy is the guy that, just likes to have other people do their stuff, and there's nothing wrong with that. You're focused on what you're good at, and you let everybody else handle everything else. And there's a lot of cool things that you can do. You can actually hire a financial advisor, and that can do it for you. You can hire or get a subscription and a robo advisor, which is basically an automated service like Wealthfront and stuff like that, that can actually invest your money automatically without you having to worry about it. Or you can do it yourself. Get a platform and start investing on your own, doing your own research, doing your own due diligence, and putting your own money where you think you're gonna make the most money. We're the DIY type. We like to do it ourselves. We've done a lot of stuff ourselves. We from modifying, adding little things here and there to our cars to, building our own tables when we first started the office and stuff like that. So we're more of the DIY. We like the challenge. We like to learn stuff. We like to do it on our own and figure things out on our own. So so figure out which one you are. The second one, choose a good investing platform. When I first started, I tried so many different ones, and this one all depends on the type of person you are, what you like, if it's more modern looking, if it's more easier to use on your phone. It all depends. Look at different ones before you pick one. For example, I tried E-Trade when I first started, and I hated it. I prefer Webull. Webull is better on my phone, on my tablet. I don't like it so much on my desktop. I like it on my mobile devices. I think it's so much better. So and that's where I'm at most of the time. I either on my phone or my iPad. So it's easier for me to use with their apps, and to me, in my opinion, is the easiest one. Is the most user-friendly one, especially if you're starting off and you're just using your phone or your tablet. Is the best one to use. Easier to look at the charts and all different types of charts. So it's definitely a great one to start off with, in my opinion. So, but there's a lot of them that you can try it out. There's Webull, there's E-Trade, there's Schwab. So there's a lot of different ones that you can test out and see which one works best for you. But in my recommendation, Webull has been the one that we both have enjoyed the best and is more user-friendly. Third one, learn how to trade. This is very important. Don't just throw your money at different things. First, know the stock, know what you're investing in, and don't follow TikTokers and Instagrammers, what they say. Actually, do your due diligence and show and see why the stock is going up. What's the news that's going on in it? Look at their numbers, look at their financials, and look at their charts, and do your due diligence and everything. And always invest in something that you know. If you know about tech, go into tech. If you know about manufacturing, go into manufacturing. Always invest in things that you know. Don't go into different things that you have no idea why you're investing. You just put your money because you see as the top gainer of the day, like we've done in the previous video. Always do your due diligence and know what you're investing in, and invest in things that you know, like, and you believe in. Number 4, set a budget. Know how much you want to lose, basically. Always invest money that you're okay losing. Never take out a mortgage on your house and invest that money. Never, ask for a loan to invest your money. Invest money that you have and you're okay to lose, because especially in the beginning, you most likely are going to lose a lot of money, if not all your money, while you're learning. And it's a hard way to learn, but it's, to my opinion, the best way to learn, because it'll make you value your money a lot more. Always know how much you're willing to invest. Say, all right, $1,000, that's all I'm going to invest. Invest that. Don't try to go with more or less and all that. And also know if you want to, I could have a long-term budget and a short-term budget. Short-term being, for day trading. A long-term budget for stocks that actually you want in the long term, that you believe in. If it's Tesla, if it's Walmart, whatever it is. If it's a long-term stock or ETF or mutual fund, whatever it is that you believe in, that it's money that you're going to use for retiring. Set a budget, $100. You put it in there, you don't touch it, you just manage it here and there. It's a long term. Then you have your short term budget. That's for your day trading, if you really want to get into that. So you have $100 to day trade here and there, but don't take a loan, don't ask for loans, don't take a mortgage out of your house to do that. Always use money that you're willing to lose and you might lose. Number 5, learn how to manage your portfolio. So when you have a long-term stocks, don't check your portfolio every single day. It is something that is going to drive you crazy because stocks go up and stocks go down, but in the long term, the stock is gonna eventually go up if it's a reliable company, they're doing everything good. It's gonna go up and everything is going to look good. Check it once every 3 months, once every 6 months. Some people say just twice a year. Check your portfolio just to make sure everything's working good, and adjust things here and there. Other people, say, one every 3 months. It all depends on what you want to do, but don't check it every day because it's gonna drive you insane. When you see the stock going down, you might panic, sell, and then in 2 months that stock is gonna go up and you could have made a lot of money. So it's something that you don't have to do every single day. Now if you're day trading, that's a whole different story. It's something that you have to be on the computer all the time, checking and seeing what's going on, and making sure that you set your limits, your stops and everything, so you don't lose a lot of money right away, because this is more of a short-term game where you can try to make some money, sell, move on, make some money, sell, move on, and stuff like that. So it's a whole different story. All right guys, so I hope you guys enjoyed this video. Let me know what you think. Leave a comment down below and I'll see you guys next time.